Hello, Oracles. It is Tesla Tuesday. So we are going to be discussing Tesla stock, what is going on with it, take a look at some of the levels here. We're going to take a look at those gaps again and say, hey, did we fill any gaps? What other gaps have we created? We'll take a look at all of those different things, what the potential future could bring, what the recent news is, and we will get into all of that in just a minute. If you guys wouldn't mind, please hit that like button down below, subscribe to the channel. It really helps the channel grow, and I truly appreciate all of your support. All right, so we will jump right into the charts today. Tesla up 2.14% today, closing at $346 even. So now the question is, we've been pushing up, and as we had discussed last week, we had this massive run up here. Obviously post-election, extreme excitement, even post-earnings, we had seen some extreme excitement, giant gap here, giant gap at the election, and then we kept on climbing. Now, we did have a little gap here that we since filled. So after we made that video last week, I talked about how Tesla could be cooling off just because of the fact that we've got all of these gaps. It was a lot of sentiment and excitement into this, and it was a little bit overblown. So sure enough, we sold off and filled that little gap that we had created. Now, as it came down, we also saw that at that level, we were at an RSI of 80, very overbought. So not to say that you have to sell off at those levels. We've seen it push even higher and stay elevated for longer times, but just based upon the run that we had, again, post earnings, we pushed up high, dipped down at the election, pushed up higher, and then sold off a little bit. So now we're on this little bit of a dip coming back up again. And now, as you can see here, I had a level at 313.90 that goes way back a couple of years as a level of resistance that we just could not break. We bounced off of it 3 times, could not break through, and then fell down all the way to $100 since then. And obviously now we've climbed back up. Now, after we passed through that this time around, when we came back down after this sell-off, we bounced right below it at that $311 level. So pretty darn close to that level. So again, if you don't know, these levels of resistance do become levels of support once you break through it. So sure enough, right here, this became a level of support. So we came down, tested that support, next day tested it again, could not break through it, and then pushed up from there. Now we did create another little gap here at that 324.68 level. So now we're again pushing up here, testing that 345 level. We've tested it before, had that intraday push a little bit here, but this is now becoming that new level of resistance. And what I'm going to do is I'm going to draw a line here at this level to give us this indication of a resistance level. So 345, 346 seems to be that level of resistance right now. We will see if we can break through that tomorrow. And now looking at the RSI, we're at 69.82. That is just below that 70 level where we get to that overbought range. And again, nothing says that we have to come down after that. You can certainly push up even higher and stay up there for longer. But these are just a little bit of levels that I'm looking at here. So obviously the excitement that we had, saw a little bit of profit taking. Now we're back down and pushing back up again. We're going to start pushing these levels higher. We'll see how many buyers are out there for this. And now again, looking at the potentials for next year and a potential recession, the fundamentals of the company are still strong. They're looking even stronger than they had been over the last 2 years. Obviously, interest rates going higher made it very difficult for Tesla. Right now, we have the interest rates coming down, despite the fact that interest rates for the vehicles themselves have not come down. They will over time. And whether or not Elon being close to Trump is going to actually affect any sort of things and regulations that are going to help Tesla out are another question. But it sounds like there may be some sort of fast track coming when it comes to regulations on FSD. Obviously, Tesla still has to actually solve FSD. But when they do get to that point, will it actually speed up progress? We don't know. At this point, that is still going to be speculation. Looking at the company strictly from a fundamental standpoint based upon the vehicles that they currently have and the energy, things look like they're going to be growing. We saw a great recovery when it came to margins, and it seems like the company is moving up in the right direction. So from a fundamental standpoint, very, very strong. Now, seeing the sentiment being very strong is nothing I want to buy right now at these levels. I'm going to be just waiting on it. And again, I'm going to be adding to Tesla. I'm not selling any more that I have. I'm just looking at a point where my portfolio right now is not looking to add to Tesla. And if we are going to be getting a recession next year, could be an amazing opportunity with fundamentals getting even stronger and then a potential economy-wide sentiment being down because of a potential recession or being in the recession could lead to some amazing buying opportunities where we fill all of these gaps all the way back down to 218, and maybe we come down even lower than that and fill the gap down here to 147. If this is the case, this is where I'll be loading up significantly and monitoring where we are in that recession area. If we are in a recession and it's not looking too bad and we look like we're recovering and we're down around this level, I will add even heavier. However, if we're down at this level and things are still looking like they're going to get gloomier, then I will go back and be looking at these levels here where we had gaps down to 133, 122, and 114. Now, again, these do stem back to the January of 2023, but previously we saw these gaps get filled that were 2 years old as well. So, again, I don't think we are going to hit these levels on Tesla fundamentals at all. I think these levels here would strictly get hit because we have a massive macro environment recession, major issues, wars, whatever is going on. That's what's going to bring it down to these levels here. And if we do get to these levels, this obviously is a place where I'm going to be adding significantly heavier at that point. And so overall, there's a lot of great things that are going on. We saw Kim Kardashian took on a Tesla Optimus bot. She's got one herself. And, I agree with Gary Black about the fact that Tesla does need to advertise, but by doing things like this, you're basically doing your own advertisements. So if you can partner up with some high profile people who are basically going to be advertising for you, it's going to help significantly. So word of mouth is always going to be the best way that you can advertise. That's how Tesla has done it all along. But there's a lot of kind of barriers right now where word of mouth is not hitting some significant chunks of our society and culture just because there's, differences of opinion there. So you're never going to breach that gap. So some traditional advertising could help Tesla in that regard. So whether we get there or not and Tesla does it, we shall see. As far as I'm concerned, it doesn't really matter because if they're going to be getting rid of the EV tax credit next year, then any competition that they had whatsoever when it comes to Legacy Auto, Rivian, Lucid are all going to be struggling even more because they're not profitable yet on vehicles, even with the EV tax credits. So now if you remove those, it's going to make it even more difficult for them to be profitable, and Tesla's just going to run away with the game even more. So Tesla right now can control pricing basically wherever they want, and just like they saw in 2021, Tesla was able to do whatever they wanted. If they wanted to come down on pricing, everybody else was forced to, and they were forced to sell vehicles at a bigger loss than they already were. We'll get back to that point again where Tesla is truly controlling the game even more if they get rid of the EV tax credit. Now, yes, that's going to end up hurting Tesla's margins in the short term, but in the long term, it should be very good for their margins and growing the entire market base for them and the total addressable market. Now, also looking at the fact that next year they're going to be changing up their entire production style to make the cost of producing the vehicles even lower, coming out with probably a hatchback style Model 3, which is going to be basically that compact car that we're talking about, maybe that $25,000 to $30,000 vehicle. If you remove the EV tax credit, you are still going to be having vehicles that are sold in the $25,000 to $30,000 range for Tesla. So right now, in some areas, you can get a Model 3 for that $25,000 to $30,000 range with all of the EV tax credits for the federal government and states. If you remove that, Tesla's basically going to be replacing it with a flat base priced model in that range as it is with that hatchback version. And now, again, I don't know this for sure. This is just the speculation that's out there at the moment, but that's kind of the trade off that Tesla would make. So you would lose a lot of those sales, a lot of those Model Ys that were out there that were selling for the EV tax credit and some of the higher end Model 3s. You would lose that, but the people who wanted those vehicles will still end up getting those vehicles. They'll just pay more for them. Maybe they won't be happy about it, but all these rumors may actually pull forward a lot of those sales into 2024, thereby giving Tesla an even better opportunity to grow sales year over year in 2024 itself. They have to get about 514,000 deliveries in this quarter in order to get that. It's going to be close, but with rumors about the EV tax credit going away, people may take that opportunity to buy the vehicles now to avoid losing that EV tax credit in 2025. Just some thoughts and things that are going to be playing out, and then we'll get in next year and we'll see how it goes. And maybe they don't get rid of it and it doesn't matter, but it still pulls ahead all of those deliveries. Something that we have to see how it's going to end up going next year. But Tesla has a lot of options that are going on right now, and Elon kind of having an inside track. When it comes to what regulations might be going out there, what Trump's thoughts are going to be, might help them out a little bit. I don't know if they're going to call some insider trading and deals like that are going to kind of squash some of this that's going on. That's a lot of political stuff that's above my head, and I'm just looking at the fundamentals of the company itself. And we'll see where we go from here. But I think even if they get rid of the EV tax credit, Tesla's going to be fine because don't forget, a lot of the people who are buying the higher end vehicles for Teslas anyway really don't get affected as much by a recession unless you get into a deep, long drawn out recession. The early on stages of a recession really won't affect many of these people at all. And even with the people who are going to be losing their jobs, if this plays out in the government that Elon's looking to do with DOGE, the Department of Government Efficiency, if that plays out, it sounds like they would still give a lot of those employees either opportunities and help finding other jobs, and or they're going to be giving them, maybe a 2-year stipend as well to still have them get paid. So while you may see unemployment going up and you end up getting the recession that's caused by that unemployment, the people who lost their jobs may still end up having that money coming in, so they won't have to worry about that as much. So you'll still have income. So it's almost sort of like stimulus checks, but very specified for the people and individuals in the government who lost their jobs. So something to think about for next year when it's going to be playing out. Right now, where we're at right now, I still think we're a little bit hot. Again, we're testing those $346 levels. If we can push above that and break that, we can be running up to potentially $400 from there. We do have levels of around the $358 mark. That was another resistance and support on the way back down. We'll see how that goes on the way back up and see if we can bounce off of that or just run right through it, sort of like we did with that $314 level originally. And what's really nice for me is, after kind of stepping away from being very specific on Tesla for, a good 6 to 8 months, kind of give me a good perspective on both ends of the spectrum, seeing, the bullishness and the bearishness and sitting on the outside, not having my emotions attached to it. I'm now seeing myself viewing Tesla, from an outsider's perspective and saying, hey, you know what? The company's fundamentals, while they were rough over the last year and a half to 2 years, obviously the stock price reflected that. While I do think that the stock price right now is a little bit overblown based upon what we had gotten from fundamentals from the earnings report and seeing the stock price go up as it is because of the election, I do think Tesla's fundamentals are now finally coming back up. I do think that we have bottomed when it comes to the margins, when it comes to deliveries. I think we're starting to push back up in a very positive direction. And even if we get into a recession next year, I still think the fundamentals are going to continue growing from that point. So if we see growing fundamentals with a reduced stock price, that's going to give us even better deals to buy at. That's my perspective right now. And I'm back to that point where I'm excited to see where Tesla is going to be growing from here because I do think they're going to be growing again. And I do think that they're going to be growing significantly. And I think Optimus could be playing a larger role in a shorter time frame than I thought. I don't think it's going to be anything massive where it's in everybody's home in the next few years. But I do think we're going to be seeing it showing a little bit more of face in the factories and maybe in other people's factories within the next 5 years. We do have to see what's going on. But I think when we see a recession coming next year and we see companies kind of taking a step back and looking at saying, hey, how can we kind of cut costs on all of this? Labor is usually the number one cost that they cut during a recession, which is part of what causes the recession. It's kind of like a self-fulfilling prophecy. But a lot of times in the past, you've seen automation. Anytime you can take any operational costs and automate them, that is going to save companies a lot of money. It obviously usually costs labor and the people who are working there their jobs, but then it kind of creates new jobs in other areas. So it's not like you lose jobs entirely, you just lose jobs in certain areas while you create jobs in other areas. So it's a shift of the job market rather than a loss of the job market. And I think we're going to be going through another one of those phases very soon. And it's going to be coming down to a lot of those humanoid robots and more robotics when it comes to factories and maybe warehouse floors. So whereas before you maybe on a factory production line, you'll have robotics there. Now, like an Amazon warehouse may have robots that are there being able to pull orders, whereas you could replace a few workers and have robots doing that. And don't forget, when you're replacing humans, you have basically 3 humans that are going to be covering a 24-hour day with the 3 different shifts that they are running. You can have 1, maybe 2 robots, depending on how they need to charge, running over the course of that day. With humans, you have to make sure that you're paying for their healthcare benefits. You're going to have to make sure that you give them a raise every single year. There's a lot of other costs that go into having human labor, accidents, people being tired, people calling out, people being sick, all those different things that factor into a business when it comes to human costs. You lose a lot of that when it comes to humanoid robots. So even if the production of a humanoid robot is a little bit less than a human, you're going to be saving a lot on the bottom line costs for that. And that's going to save these companies a lot of money. And so if we get into a recession next year, we can see that transition kind of starting with the timing of these humanoid robots coming out. Again, I don't think it's going to be very fast, but I think a lot of companies will end up seeing that. They'll kind of test the waters, and maybe over the next 10 years, we kind of see that transition taking place. So obviously Tesla in this facet is going to be a main player in this because they're one of the ones that can mass produce these robots as it is. I think we're going to see plenty of other players that are out there as well in that field, but something to pay attention to when it comes to Optimus, and something that Elon has told us in the past as well, that he thinks that Optimus could become their largest revenue producer in the long run, massively dwarfing all the rest of their revenue streams as it is right now. So we'll see how that plays out over the next 10 years. We'll see how the next year plays out. You guys can let me know your thoughts in the comments below, how you think it's all going to play out. Thank you so much for watching. I appreciate all of your support. Have a great one.